The market rally pushed the S&P to a new record. That rally lost steam after the Federal Reserve's minutes highlighted some economic uncertainty yesterday. Joining us now, Neela Richardson, Principal and Investment Strategist for Edward Jones. Neela, you have not been really pushing back against this rebound as a strategist. I think you explained it fairly well, and it's what we talk about all the time. Markets are forward-looking, and there has been a lot of stimulus, so that kind of explains it. But we've been talking just 5 minutes ago about the possibility that bullishness got a little overdone. Do you expect some bumps along the road, and how big is this bump we're looking at right now, near term?
Good morning. Well, a pullback would not be unexpected at this point. Even looking back historically, if you look at other nascent early stage, we'll call it a bull market for now, you can expect to see some pullback in the first year. And this market could get rattled by the pandemic. And that's exactly what those Fed minutes showed, that, we are not out of the woods in terms of the economy yet. And for the stock market to continue to rally the way it's been, you have to believe two things. One, that this recovery in earnings and economics is going to be relatively short and quick. And two, that interest rates are going to stay very low for a very long time. Now, we can buy into that last one pretty easily. The Fed is pretty much committed to it. But the former may be under stress at times as we really see the economy play out in an unscripted way because of this pandemic.
You also point out that, I don't know whether we talk about inflation as an imminent threat, but it certainly moved off of its pandemic lows. And that's something that's in the, is that in the, how far in the future do you see that? Is it something to be concerned with today?
Yeah, this is the number one question we get from clients. How big of a threat is an inflation spike? And we don't really think it's a threat. First of all, the COVID-19 pandemic is deflationary. It's been a depression on consumer demand. Now, it's true we've seen inflation rebound, and we hope to see it continue to rebound as the economy improves. So interest rates are going higher, but the question is to what degree? We're not seeing a commensurate spike in energy prices or oil prices. In fact, we're seeing something very different play out on the oil stage. So we think that inflation stays contained and still well below that 2% target that the Fed has been trying to reach for the past 30 years.
Yeah. It's funny because we hear that the market really does discount into the future. But so when I saw some of your comments, the headline is politics, and I'm like, I wonder what Neela thinks about, what's happening, which seems right in front of our face. But it's so in front of your face that you go with congressional negotiations about more stimulus. So we're not even talking about November. You think near term, the politics we need to worry about are the stalled negotiations, because it matters whether we get through that and get some money where it's needed. Is that correct? And then comment, when do you start worrying about November, or do you not worry about November?
Well, the markets are going to react to November. There's no doubt about it. But we're not going to hang our hats on a knee-jerk reaction to the November election, because history shows that stock markets can perform under all kinds of political arrangements, whether the Democrats control the White House under divided governments, whether Republicans control the White House. What really matters is the economic fundamentals. And that's why the short-term policy measures that the markets and the households are hoping comes out by the end of the month are so crucial. The economy is in a vulnerable time. Eventually, it's going to have to stand on its own 2 feet. But that handoff from the government support to an economy that has a sustainable recovery is really in the early stages. And so we think another stimulus relief package is still required at this point.
Edward Jones, I've always I've been around a long time. I worked at 4 or 5 different firms. How many offices now? I've always sort of admired it as it seems like a small town firm where you'd know your guy. And how many offices now? Where is it mostly concentrated?
We have over 19,000 financial advisors. We have over 18,000 branches. They're located all over the country. In fact, almost 70% of the country has an Edward Jones office. I just passed a new one near my home in New Jersey. It's great to see because those branches are part of the community. And so we hear what the clients feel, and we know their concerns about this market. They're concerned about the economy. They're concerned about the level of federal debt, but they're also concerned that the stock market really is reflective of the longer term fundamentals. And so that's what we're trying to connect for them.